Hey guys, want to just talk really quick about some of the things I'm watching in the market, try to give some context and clarity. I'll probably just confuse you more than anything, but bear with me here. I want to show you 3 different charts today. And I'm looking at, we're going to look at the S&P 500. We're going to look at what's going on in gold. We're going to look at Bitcoin, the old funny money, as JC calls it. Okay, first up, S&P 500. Continue to be in that uptrend, right? Higher highs, higher lows. Long-term uptrend in the S&P 500, potentially some negative divergence in the RSI or the relative strength indicators. But this week in particular, we had 2 really bullish candles right here on Wednesday and Thursday this week. And I anticipate we'll continue seeing a strong rally into the end of the year and the beginning of next year. Again, nothing's guaranteed. That is just my analysis or opinion of what the chart is indicating to me. Although we'll change that according to, I'll change my sentiment according to the chart as it tells me at any given time. So you watch for, again, a MACD histogram crossover as that turns positive and picks up momentum in the market, rising RSI, new highs. And so we are pretty close to, hitting highs, an all-time high again, and further just digesting this election. So up next here, we have, I'm going to flip over to gold. Interesting chart here. Gold outperforming stocks as measured against the relative performance against VTI, the ETF, the Vanguard Total Market ETF. And what we can see actually is that if we go back to the kind of beginning of this gold rally in October last year and look at a Fibonacci retracement level on that, this last week and a half or so, or this last 2 weeks, gold pulled back off of its high and kind of digested that return up in the market, coming back to its 23.6% Fibonacci retracement level. Okay, that's a key area of support. And you can see that it rallied back off of that. Now, here's the thing is once you rally back off of that, you have to start being cautious because you got to be careful when you enter a trade. And there's nothing here saying that you wouldn't further go back to test and fall back and, drop back down to say like a 38% retracement, which is coincidentally right at the 200-day moving average, which would be the next area of also considered support. Okay, so you have to be careful. Some things you want to be careful about here is you're below your 20-day moving average, your 50-day moving average, right there as overhead resistance. You have some resistance from over here in late September. And as we broke through that today, though, that becomes pretty favorable. So that could be an interesting trade for somebody to consider if they've been waiting to get in gold. And just be aware of that. You also had a MACD crossover, which shows good momentum in the market. So gold's an interesting thing to keep your eye on. However, I don't think gold can go up infinitely. So if you're going to get in the trade, understand why you own it and what you have in your portfolio for. It has a place in some portfolios. I would say potentially most portfolios, but it's not a mandate. And I certainly would say, like any other risk asset, which gold is 100%, it's totally a risk asset. Manage that position size, right? Okay, last up here, we're going to flip over and look at Bitcoin. A lot of crap going on this chart. But let me tell you here, I'm going to try to walk you through it. On this side here, like there's just a lot of stuff. And I'm going to delete it as we kind of go. Volume by price here is on the side. And this is saying what levels are people buying and selling Bitcoin really? Like when do the most people come to transact in Bitcoin? And the reason I left it up here is because you can see that as it traded sideways in this channel, building that base out earlier this year, there was a lot of volume in that 70 down to 55,000 range or so, right? A lot of volume. And then it tapered off. And as it broke out, the volume really dried up. What you can see though is actually at 87,000, there starts to be a lot of volume. 87,000 to 91,000 really becomes an interesting amount of volume. That's significant because the more people you have transacting at a certain level, the more it validates the price. So again, right here, you can see in this level, on the side of the chart here, these green and red bars are the volume, and ton of buying and selling in here, and then it tapers off, and then in this area up here where it started trading sideways for a couple of days, it starts to build out a lot of volume. If we look at MACD, it's waned in the past days, but it's still positive. Let me go ahead and just get that out of your guys' way. RSI, again, RSI is overbought, and I think there's maybe some wisdom in trying to pay it a little bit of attention or credence to that. But I'll say that a oscillator like this, like RSI, when something starts a good trend, it can be overbought for a significant amount of time, right? Overbought doesn't necessarily mean sell. And so, but it may mean be cautious, right? You can see volume on this move up, a lot of good volume here. However, it's dropped in kind of the most recent leg up. So I don't know that we necessarily get volume confirmation of the most recent moves, but let's look at some Fibonacci retracements. So the yellow bars are going to go on a Fibonacci retracement back to 52,000 at its bottom in September, when the trend really changed for Bitcoin and it started putting in higher highs and higher lows. Okay, if you run that up to today's price action, the top of today's price action, your 23% retracement is right in the middle of that volume level where there starts to be a lot of volume. And if you pull the same Fibonacci retracement, but you pull it back to where the breakout level was here, kind of post election, you get your 32% pullback on that move, kind of in that same area. So you start to have these converging zones of support. And so, but remember, if you break below support, it becomes resistance. So that's something interesting. And you have a 20-day, rising moving average. We're healthily above it. So I don't think that's that. I think watch on Bitcoin, watch for these Fibonacci retracements would be my recommendation. And be careful. Consider taking profits at a certain point, right? Like sometimes you just want to fade it if you're trading it. If you're holding it, you're just holding it to hold it. You're, long-term holder. Hey, Godspeed. Be a hodler. Love that for you. If that's what you decide to do. If you're not and you don't have that risk capacity, then don't. One of the things I will point out though, in why, I'm leery about this move extending up to significantly higher levels without having some kind of pullback here in the near future, is like we are so far extended beyond the trend. And this green line, which may be a little bit difficult to see, this one right here, okay, that is the volume, the anchored VWAP. It's the anchored volume weighted average price. So it's saying of all the people that have bought since this point, what's the average price people have been paying, basically? And you can see that like we're pretty far extended above that, which means there's a lot of profit to potentially, that's kind of frothy at the top almost, if you will, where if it gets to this level, people might start liquidating because they don't want to see the loss, right? And so anyways, I hope y'all aren't getting overwhelmed, but this was the breakout level, 73,000. And, it's been on a breakout. It's been on a tear. I think Bitcoin's in a nice trend, but that doesn't mean that there isn't going to be intra-trend volatility. So just be aware of it. And, with that, I hope I wish everyone all the success in their trading, in their investing, in their retirement planning. And if you want to get any other of my opinions on the stock market or the bond market or your portfolio individually, whatever it may be, reach out. We're happy to do an analysis for you and talk to you about the risks that you may or may not be facing, and help you understand if what you are investing in or your current advisor has you invested in is in alignment with you and the needs that you have. Find us at dusharmwealth.com, and we will see you guys out there.
Information presented on this program is believed to be factual and up-to-date, but we cannot guarantee its accuracy, and it should not be regarded as complete analysis of the subjects discussed. Discussions and answers to questions do not involve the rendering of personalized investment advice, but are limited to the dissemination of general information. A professional advisor should be consulted before implementing any of the options presented. Encompass Asset Management, LLC is a registered investment advisor with the U.S. Securities and Exchange Commission and only transacts business in states where it is properly registered or is excluded or exempted from registration requirements.